So how does a 110-year-old family business make the massive leap to go public and not just survive, but absolutely crush it? Well, today we're diving into the post-IPO playbook of Puig, the Spanish luxury giant that has pretty much orchestrated a masterclass in strategy, discipline, and growth. At its heart, Puig calls itself a home of love brands. And that isn't just some slick marketing slogan, it's their core philosophy. It's what took a brand like Carolina Herrera and its Good Girl fragrance and made it the #1 feminine fragrance on the entire planet in 2024. And that brand power, it translates directly into some serious financial muscle. The company hit a staggering 4.8 billion euros in revenue in fiscal year 24. I mean, that's just smashing expectations and outperforming the entire premium beauty market. As the chairman and CEO Mark Puig put it himself, this was a truly transformative year. But here's the kicker. They didn't just go public. They delivered on their promises right out of the gate. That sets a powerful tone for their new life on the stock market. Okay, so here's how we're going to break this all down. We'll kick things off with the IPO itself. Then we'll unpack their growth engines, take a look at the financials, see what's on the road ahead, and wrap it all up with a final takeaway. So first up, that IPO. You gotta understand, this wasn't just some financial transaction. It was a massive strategic pivot, turning a century-old family legacy into a modern public powerhouse. And this timeline really puts that acceleration into perspective. For over 100 years, Puig built its empire privately. Then boom, May 2024, they go public, and almost immediately they're reporting record revenue. That right there, that's the inflection point. So where did all that record-breaking revenue actually come from? Well, it wasn't just one thing. We really need to unpack Puig's two powerful growth engines. First, where they're selling, and second, what they're selling. Now, you've probably heard the news, right? A lot of the world's biggest luxury players, think LVMH, they're hitting a wall in China, facing some pretty significant slowdowns that have investors worried. But that is not Puig's story. Nope. Instead, Puig is actually accelerating across the Asia-Pacific region. So how are they doing it? Well, they're playing this brilliant game of geographic arbitrage. See, they've historically had a pretty small footprint in Asia, so now they're expanding like crazy in places like Japan, South Korea, and India, finding fresh growth right where their rivals are stalling out. And just look at the numbers here. The sheer scale of that outperformance is wild. A staggering 35.8% like-for-like growth in Asia-Pacific in just Q3 of 2025. I mean, that completely dwarfs the solid but much, much slower growth in their more established markets. But hey, this isn't just a story about geography. Inside the company, there's an equally important pivot happening between their different product categories. A really smart strategic rotation is underway. And this chart right here shows that rotation in action. For years, fragrance was the undisputed king at Puig. But as its post-pandemic boom kind of cooled off to a steady 2.8% growth, the makeup segment just roared back with an incredible 18.8% surge. So what's really key to understand here is that this makeup comeback was absolutely not an accident. It was driven by the huge resurgence of their superstar brand, Charlotte Tilbury, a really smart move into new channels like Amazon in the US, and a pipeline of successful new products. It's a textbook example of having multiple engines ready to fire when you need them. Now, you can't deliver this kind of growth without a rock-solid foundation, and that's where Puig's financials come in. They've been building a fortress of a balance sheet through some serious deleveraging and incredible discipline. All right, quick sidebar on a key term here, deleveraging. All it means is that a company is actively paying down its debt. So why should you care? Because it makes them more stable, less risky, and gives them a lot more firepower for the future. And Puig has been deleveraging at a seriously impressive pace. Their key debt ratio is down to just 1.1x. Now, for a company that just went through a massive IPO and has been acquiring other companies, that is a remarkably healthy number. And check this out. This is a great example of some of their sophisticated financial engineering. They started with 2.4 billion euros in liabilities from past acquisitions. Then, through some smart buyouts and restructuring, they basically cut that in half and spread the remaining 1.1 billion in payments over 5 years. That move prevents a cash crunch and frees up a ton of capital to reinvest in growth. All right, but it's not all smooth sailing. No business journey is without its challenges. So for a balanced view, we have to look at the headwinds on the horizon that Puig's management is going to have to navigate very carefully. So, there are three main risks to keep an eye on here. First, currency headwinds, mainly from a strong US dollar. Second, a heavy reliance on the Q4 holiday season for sales. And third, some early signs that things might be slowing down a bit in Latin America. And this slide shows you just how real that currency risk is. In Q3 of 2025, the company's organic growth was a healthy 6.1%. But after they converted all their sales back into euros, the number they actually had to report was only 3.2%. Foreign exchange rates literally ate up almost half of their growth. It's a huge deal. Okay, so after looking at the impressive growth, the smart financial management, and of course the risks ahead, what's the final verdict? What's the bottom line on Puig's big move? Let's wrap this all up. The final takeaway, when you boil it all down, is that this is a story of highly disciplined growth. So let's put the whole playbook together one last time. They executed a masterful pivot from a private company to a public one. They've got dual growth engines firing on all cylinders in both Asia and makeup. They've built that financial fortress we talked about, and they are proactively managing the risks that are coming their way. Look, Puig has proven it can deliver on its IPO promises, period. And that leaves us with one big, exciting question. With the Capital Markets Day coming up in 2026, what new ambitions is this well-oiled machine going to unveil next? That is the chapter the market is waiting for.